Welcome back to this week's edition of the Tech Corner. I'm George Tsilis, Senior Markets Contributor here with the Schwab Network. On this week's Tech Corner, we're going to be highlighting Apple Incorporated. Now, this is the second time we're covering Apple. If you want to watch the first segment back in February, click here. Now, Apple is a well-known leading global technology company that designs and manufactures and markets a diverse range of consumer electronics and software. Familiar products include the likes of iPhones, iPads, and Macs, wearable devices, home accessories, and the company also provides related software services as well as digital content. Now, Apple is well known for its tightly integrated ecosystem of hardware and software, developed with high design standards to maintain strong brand loyalty over time. Beyond the hardware, Apple operates an extensive services ecosystem, featuring platforms like the App Store for app distribution, Apple Music for streaming, and Apple TV for exclusive content. The company also provides payment processing services through Apple Pay to further extend its offerings. Now, in terms of a revenue breakdown by segment, the popular iPhone is the biggest generator of around 47% of sales. Second includes services with around 29%. Now, when it comes to competition, Apple faces it from major companies in the technology sector. Notable competitors include Samsung Electronics out of Korea, which competes with Apple in smartphone, tablets, and wearables accessories. Alphabet, symbol Google, which is known for its Android operating system and a wide range of hardware products and software. And Microsoft Incorporated, competing in personal computing and services through its Windows operating system and Surface products. Now, Apple's unique value proposition lies in its integrated ecosystem, which offers seamless connectivity across its devices and services. The strong ecosystem fosters customer loyalty and retention, as it provides a cohesive user experience. The company's ability to integrate hardware, software, and services under one unified platform adds significant value to its offerings, setting it apart from all of its competitors. Now, in most recent news, going back to last week on the 9th of September, Apple held its new product event to unveil its new family of iPhone 17 products with its new AirPods and Watch Series 11 with other great products as well. Now, as I mentioned earlier, the iPhone continues to be Apple's dominant revenue driver. And gains in the newest iPhone lineups are particularly important because new models tend to stimulate upgrades, which feed directly into that segment. The enhancements in the iPhone 17 and the new Air models are likely intended to counter slowing upgrade cycles going forward. In other news, going back to August 3rd, the company reported its fiscal year 2025 earnings and sales, which came in much better than expected, featuring strong top line and bottom line sales, focus on the iPhone and services, and particularly in China, which grew positively for the first quarter out of many, 4% year over year. China sales is a key theme for Apple, as this core region of the world has been a persistent growth headwind over the past year. Now, when it comes to Apple, there are many positives to consider. First off, the ecosystem, as I mentioned, remains sticky, which offers investors a durable competitive advantage. With recent product launches like the iPhone 17 and Apple Watch Series 11, this offers value mostly without price hikes, which supports customer retention. Recently, Apple announced a $600 billion U.S. investment, which promises long-term resilience and stability of the company, while AI partnerships are key catalysts for future growth. Apple also excels in profitability with net income margins over 24%, significantly outperforming the sector median of 4%. This high profitability margin reflects the company's efficiency in generating profits from its sales. Now, despite many positives which we're aware of for Apple, we have to address some of the concerns as well. Apple's latest iPhone 17 launch lacks significant innovation, contributing to a stagnating upgrade cycle and leaving the stock trading at a premium compared to its growth in sales. Despite hardware upgrades, Apple's cautious AI approach lags behind competitors, and its reliance on incremental product updates may limit its appeal and mass adoption going forward. Apple also trades at a valuation premium to its peers as well as its own 5-year averages, and near-term growth outlook is actually weaker. Taking into consideration the forward PE ratio of 32.37 is higher than the sector median of 25, but also higher than its 5-year average of slightly over 28. Revenue growth on a forward basis is estimated to be around 4.4%, whereas the sector median is around 7.5%, and this is also lower than the company's 5-year growth average of 8.85%. Forward EBITDA growth is expected to be around 6.2%, below the sector's 11%, and also considering this is below its 8.78 5-year average. And lastly, uncertainties like tariffs and regulatory risks may also be impacting its financial performance. Now let's take a look at the technical analysis picture of Apple. While the 3-month price performance is strong at up over 21%, the 1-year performance of 9% falls short compared to the S&P 500's 18% gain over the last year. This indicates fluctuating investor sentiment in Apple. Upside momentum as measured by the RSI indicator is positive, however, it's beginning to slow in diverging with price. Despite the RSI divergence, the stock is trading above a rising 50-day moving average and above the positive sloping 200-day moving average, which validates the strong technical condition for Apple. This indicates the intermediate term trend is still bullish. Now, in summary, Apple continues to compete in a highly dynamic market characterized by rapid technological advancements and advanced competition, which means they must continue to innovate over time. The company primarily sells phones and peripheral technologies around the globe. And of course, smartphones are now ubiquitous and in need of constant upgrades. From a network effect standpoint, consumers are anxious to remain within the Apple ecosystem, as current users do not want the cost and complexity of pulling their media libraries out of the comfortable arms of Apple's ecosystem. Knowing this quite well, in recent years, Apple has been switching more of its revenue weight towards services business, which offers higher margins, more recurring income compared to hardware alone. All right, that's it for this week's edition of the Tech Corner on Apple. Please join us next week. We're going to be covering Palantir Incorporated once again. This is known as one of the larger software application names, which has had a phenomenal price performance this year. Now, please don't forget to like and subscribe to the Schwab Network. I'm George Tsilis. We'll see you next week.